Hello, how are you? Today we are going to do the Square's stock analysis, and Square, the company name is Square Inc. and the ticker is SQ. And in this one, as usual, I'll try to go first for the business, see what this business is all about, and then to go into the financials, go to quickly look at its margins and deep into the Pratt models and some other models, and then try to make an opinion out of the current environment or from the future perspective, right? And then to do the opinion. Okay, so let's get started. So this video is requested by, or this talk is requested by one of my YouTuber, and thanks for asking. And sorry, it takes me a bit of while to come up to this video, but here you are. Okay, so let's get started. So here is the agenda. As I mentioned, is what will go, what is Square, financial, and the form the opinion. Okay, so let's get started. So I'll spend 1 or 2 minutes to quickly go over who doesn't know. So it's always good to know the business, because we are not investing in just a ticker, right? It's the business we are investing as investors. Okay, so Square business started in 2009 as accepted like a payment card payments kind of a service, right? So they have like in your phone you can hook up some kind of a gadget or device. It's called like a mag strip maybe to read the card, and then you can accept the payment. So it's like a game changer, right? Because mostly who is their customer? It's like a small business, a medium-sized business, but these are like a very low end, I believe, the small kind of a business who take it. And then with the time they grow over with the Cash App, but this Cash App is just another app to transfer the money between the individuals. And then they grow further, go to the cloud-based POS systems, mainly for the restaurants. That's what is in the paper. And even go further dimension to the food ordering platform. I don't know what's the reason why they are honestly going into the food ordering platform. And the game changer happened when they try to give more services whoever come to their platform, right? To the POS systems or that. So basically they're trying to lend the money like a bank, right? Small bank. For sure they need partners in that. So basically they have all the profile of the company because of their revenue, and based on certain percentage they lend the money, and in this with the partnership with the industrial bank. So that's overall, now we understand. So started from the payment services, which is a very heavy kind of so many competitors there, and everybody wants to come to the payments and solutions. So this is quite a tough and competitions kind of a market, right? So let's go now into the financials. Okay, so in their financials, if you see, this is their gross margin, EBITDA, operating margin, and net margin. So I have plotted this company's, as you know, this started in 2009, and I'm seeing from the past 5 years, right? As you know, the gross, the profit margin, it's pretty good, right? It's increasing, right? It's 29% to 40%. That's very good. But if you notice from the operating margin, right? So strange, very strange, right? It's negative, and it's negative is declining, and then recently from 2017 it's coming up, right? But the question is, they're just providing the service, right? That's what in my mind the question. Hopefully you also get the same kind of a questions. And if some company who is just providing the payment solution and nothing else, right? So every transactions you get a cut, then why you have so much distance between the gross margin and operating margin? Why there is so much operating cost there, right? And worst case happen when the net profit margin is negative. Okay, and it's keep negative. You see, until the 2018 it's minus 1.2, right? So now think from that perspective, and that's what my question is mine. They are into so many segment of business, they are lending the business money as well, but until 2018 they are is negative. and just within 2019, last year, they turn into little bit money into terms of the profit, but then the coronavirus hits again. Okay, so let's see now their revenue growth, right? Because if people are saying, oh, because maybe this is a revenue company, so I literally want to see the good revenue, right? Like a spike ups. Okay, so let's see next. Okay, so this is again from 2015 to 2019, and then on the vertical, this is a percentage of their revenue growth year over year. So you see it's keep declining, right? It's keep declining, and then it's recently picked up again to 40%. So that's not a small on jump in terms of year over year in terms of the revenue growth, right? That's a very big jumps, but still the company is negative. So that's what the financial is saying. Let's go deeper right into it. I'll open the spreadsheet and show you a little bit more. Okay, so in this spreadsheet, I'm going into very deep into their revenue, cost, and earning per share growth rate, and trying to find out honestly from where, even if the net profit margin of 8% is coming, this is coming from where, right? So again, you can see very easily see from this is a revenue growth, and the cost of the revenue. Look at the cost of the revenue, right? My God, it's 41% jumps to come up with 42. It adds the par. Really, this thing. So I have highlighted this into the red, right? And this is consistent in the past. Come on, this is a financial service company, right? I'm not sure what the hell is they are doing. And EPS growth, just ignore it. It's very negative. Okay, so this 8%. So this 8% is coming from where? It's 8% is coming from their tax burden, right? That's one. So 99%. So basically they haven't paid taxes, right? So their tax margin is lower, which driving this their net income. So that's number one. And the second thing, what we can easily see from the financial, what financial level. So basically they are taking more and more debt as compared to the equity. So if we have a less equity, your return over equity goes up, and if we have more leverage, then for sure, if the return, that's why this is coming up as well, right? Because of the higher financial leverage. So, which I honestly didn't like at all, and so that's why their effective tax rate is 0.7%, which is for sure, and in the past year is negative for sure, because if they have no income, it's negative. Okay, if I want to, if you want on, okay, so this is pretty very bad in terms of the financial, honestly. So so let me show you the liquidity. Okay, if I want to show you on the liquidity side, is pretty okay. So the company have the enough short term the cash, and I will be honestly surprised if that's not good. But this is okay. So I just want to show it to you is over 1. So if you want to know more, you can just go to my channel and see what does it means. So pretty much it's saying the short-term assets is higher than the short-term liability. Okay, I have some cash flow here as well, but on just to save time, the cash flow is also declining as compared to the debt, so it's not good. Okay, let's go to the risk profile, and I'll show you the risk. Okay, so this is their 10Q statement from 2020. So as you can see, this shows the risk of the company and risk related to the business and industry. So this mentioned COVID-19, right? So it's very clearly mentioned here that the company on the ongoing COVID-19 pandemic and measures intended to prevent its spread has continued to affect and material and adverse effect on our business and result of the performance. Very clearly mentioned. Small businesses, which constitutes a large part of our sellers, right, has been impacted particularly hard, right, because of their lockdowns and all. So their core transactions business, which is their payment processing business, right, it's been hardly hit. So that's why they, because of this pandemic, and if the business continuing to close, it might have suffered. But my thing is how they are making the business is from this square capital, right? So that's what's because they're trying to lend the money more and more, and then they have mentioned here. So what they're saying, doing it, so it's more like a SPC kind of a securitized kind of a model. So what I can say, so basically they loan the money and then just sell the loans, right? But if they won't able to sell the loan, maybe, or to the third party, or maybe those interest payment even, right, that they are unable to sell the loan, or maybe they sell the loan at the lower value, so which affects the business. Right now they are a bit new, but what happen if the second wave will come, right? How far they can go? They cannot go. Maybe this first quarter they can see based on the earlier revenue, they can able to do something, but I don't think so it's a very good way, because that's not their core business, right? So the core business is to lend, not to lend the money, but to the payment processing rights. And so now they also mention here, our rate of revenue growth has been slowed at times in the past and may decline in the future, right? And they have indicated because of failure to generate the revenue, right? So that's what it has mentioned. And also they are going into the cryptos and tokenizations and all. That's what this mentioned. They keep the technology is changing as well. So again, this payment processing business is not easy, right? Like Apple is come up with their own card, their big giants are there, and their infrastructure is depend upon, they're not doing their payment processing, they are just the interface. They're dependent on the MasterCard and Visa rights to do the processing. So that's what it is. Okay, so but they're combining with the whole package. I'm not denying that, from the hardware and software, but I haven't seen that. So let's see from the other quite value perspective. So here, trying to form the opinion, right? So first is a couple of other factors as well, right? So the one factor is PE ratio, right? So PE ratio at the moment is 72.75, which is insane. I don't want to, this is not a very, so that's why I highlight this as a red, right? So this is a red, this is not good. And EV over EBITDA ratio is 641.30. So this means if you invest today, it will take you 641 years, things from that year to recover your money. Okay. Again, the third factor which I am looking right now, and these are the basic factor, right? Honestly, I don't even look into the company if these are not good, but at least I'll see from somewhere. Beta is very high. This means it's very risky company, right? Closer to 3, right? If I even ignore this, so they've been running in the business is a very long time, right? But are they in the market leader in any of the sector? That's the question I'll just want to ask them, right? None, right? They are not in leader, right? So they're trying to not even leverage, like they have like a big in terms of the payment processing, okay, then jump to another. But seems like they keep jumping and misdirecting. So that's how I'm looking this stock is. Idea was pretty good to capture the small business, but really they have captured? No, they have not captured, and they are negative. So maybe I'm too pessimistic, but that's what I have seen so far. And even if we so the 5-year revenue growth is 30%, so I just give them amber, not like a green kind of a sign is okay. But maybe some people think maybe okay, this is good, and further they will capitalize. But I don't want to wait, right? What if the second wave come and small business owner will get affected? This company stock will for sure crash, no doubt about it. And again, the stock is all-time high, again due to speculation, so that's a not good time to invest, especially given that. But if different people have different opinion, I have this opinion. The model can be good, but is it good right now to jump in and buy this Square? No. Maybe in the past, the stocks for sure rallies high, people have make the money, but we cannot just think that from the past what happened, it can continue to happen in the future, right? So that's why it can give them some idea, but we have to see from the glance of what's happening in the market, what will happen in the future, and what kind of environment is. So for sure, give a thumbs up if you like this video, and so it beats the Google algorithms. More thumbs up you like it. And if you want me to cover any other video, or if you are looking for something like this from the investor perspective, check out some other video on my channel, and I'll post a playlist here. And if you want me to comment any other video, and what's your thought on Square One, please put on the comments, right? I'll definitely love to see that. Okay, thanks for now. See you in next video, and bye.